Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everyone, checking in on CMG NKE GPRO TWTR on the daily, weekly time frame. So CMG continuing to follow the same pattern. Upper wick of profit taking, higher open, higher low, higher high. The bulls still in full control. We saw a pop today that was associated with some bullish action in Panera. And there was definitely some sympathy play in the same sector there. CMG seeing that upside as well, almost acted like a short squeeze there. So as long as we hold the upper Bollinger Band, we will see continuation. If we lose that upper Bollinger Band, we will look to consolidate. So we keep seeing these upper wicks, and we've formed a couple bearish reversal candlesticks in a row, but this is not normal trading action. We like charts, and we utilize them because they chart human emotion in a pictorial form that we can play based off of. But when you have company buybacks going on, or whatever's going on here for CMG, it's artificial in the sense that it makes these signals not nearly as reliable. So we do have bearish reversal candlestick Friday, bearish reversal inverted hammer today. We'll see if we get follow through, but I personally am not playing CMG bearish. I don't want to be betting against people with lots of money that want the stock price to go up. So at this point, I do not like any bullish entries. We're too extended to the upside. I do not like any bearish entries at all. In my opinion, the play is to be sitting on the sideline and waiting for a bullish entry after some sufficient consolidation has occurred. We'll be looking at this 434 previous resistance now support, but we are so far above that level at this point. We'll see if we do make it back down to that point. We still have the upper Bollinger Band as support on the weekly time frame. The low of this week bounced off of that level, and that was in the 440s, 447-ish. So we are still in breakout mode on the weekly time frame, seeing continuation. The next resistances are 467, 460, make that 470. So 467, 470, and 481 are the next three resistances on CMG. Daily chart due for consolidation. We'll see when the bulls and buying power runs out. NKE bullish reversal hammer. After seeing further downside, it was the inability to keep the weekly 100-week moving average support that was a red flag for the bulls, and now we're seeing a rejection from the middle Bollinger Band, a loss of the 50-day moving average. The bulls need to get back over this middle Bollinger Band to regain some momentum. We are forming a higher low now at 55.15. Must see a green day tomorrow to confirm this bullish reversal hammer after a couple days of pullback. The weekly time frame, that 100-week moving average after holding for 4 out of the last 6 weeks, was lost last week. That's now resistance at 56.29. And the bears are back in control on the weekly time frame as long as that level stays resistant and as long as this daily middle Bollinger Band stays resistant as well. So the bulls made a really nice recovery, but we're giving some of that back. Let's see if this is going to be our higher low, and the bulls need to get over 57.10, the high of the bounce, to see really strong continuation. GoPro very, very tight. I don't like it in either direction right now, but we can be watching these inside bars on the daily time frame as the range gets ever tighter. Support is 857, 858, 852 the last 3 days, and resistance is 875, 76. So pretty much the last 2 days has had a tighter range by 1 penny from the high and the low, and a clear break is very likely to happen tomorrow. If we see a bear break of 857, we're looking at 852. If we get a bull break of 875, we're looking at 885. So we'll be watching for a break of today's range for some indication on the momentum for tomorrow. The weekly time frame is still a potential bear flag as long as these exponential resistances continue to reject the price as they have been doing for months. So that 8-period exponential resistance 873 knocking the price down. And in terms of support on the weekly time frame, there's not a ton established. The major must-hold support is 816 on this weekly time frame. Twitter, we were looking for a break here and a close above the middle Bollinger Band to be looking for a bullish position. Obviously, that did not occur. I do not like Twitter bullish until we are confident that we're going to close over that daily middle Bollinger Band. That's at 1505 and dropping. The bulls did buy the dip off of 1465, but that's the lowest price we've seen in about 2 weeks. And we've only seen one price lower, make that two prices lower, 1450 and 1432. So the bulls did buy the dip. It is technically a hammer, but until we get over that daily middle Bollinger Band, we will be looking for some short-term upside when that happens, but patiently waiting and not trying to force anything until it does, as the bulls are getting rejected by the bears from the 4-period daily and weekly exponential. And it's actually the 8-period on the daily, the 4-period on the weekly. So the weekly has rejected from that level now 7 weeks in a row so far, and that's at 1504. So no follow through on any of these bullish reversal candlesticks on the weekly time frame. Twitter bears are remaining in control. Must get over the daily middle Bollinger Band to see any kind of short-term upside. I appreciate you watching. We'll check back in tomorrow. Have a great night.